Miss M just called and said that she did not file her 2024 taxes because she did not earn a lot of money. My name is Paul Vasquez with Tax Lab. We help people become ethical millionaires and save on taxes. So, there are 3 filing thresholds that you'd have to worry about for 2024, maybe 2025 as well. The first and kind of standard one, we'll start with the high and go to the low. So if you are just a W-2 earner and you make under the standard deduction, if you're single in 2025, that standard deduction is $15,000. So if you made under $15,000 just with W-2 type income in 2025 or this year, then you don't necessarily have to file a federal tax return because you fall underneath that standard deduction threshold. Now, you might want to if you think you're going to qualify for some additional credits because maybe you want some money back. Maybe they withheld some from your paychecks. Maybe you want that money back. Maybe you think you're going to qualify for some credits, some refundable credits that'll put more money in your pocket. Then you still might want to file even though you're under that threshold. Now, there is an even lower threshold that you have to worry about even if you're a W-2 earner again, and that is the state filing. Here in Virginia, it's $8,000 is the standard deduction for Virginia. And so you've got to worry about that threshold. Now, there is the personal exemption as well, so that can bump it up just a little bit. But once you get to about the $8,000 mark, you really should be getting more specific about where your numbers fall. Once you're at that $8,000 of income, because that's where your standard deduction starts in the state of Virginia. Now, if you're not in the state of Virginia, your state may have a standard deduction that if you meet, you don't have to file. So that kind of lowers the threshold down. If you're saying, okay, even if I don't have to file the federal, I may have to file a state tax return if I made over $8,000. And it can go even lower. If you had $400 or more of receipts come in from self-employment. So this is a 1099. This is you going out there and getting cash for cleaning up or for doing something that you traded your labor for this money, and it ended up coming to at least $400 for the year from all those sources cumulatively. It doesn't have to be from one, but at the end of the year, if you had income or receipts of totaling $400 or more, you're going to have to file your federal taxes because it's no longer the income tax that you have to worry about. You have to worry about the floor of the self-employment tax. It's an additional tax. So if you have earned income outside of W-2, you get taxed twice most of the time. Right? If you have this earned income from a source outside of W-2, you're gonna have 2 taxes to worry about. Number one is the income tax, which it gets withheld on that W-2. The other is the self-employment tax, and that is partially paid on a W-2 by the employer and partially paid by the employee. That's the FICA, the Social Security, Medicare. So that's taken out, and people complained that those who are working for themselves weren't paying their fair share. So they said, okay, if you've got outside W-2 income coming in, you've got to pay self-employment tax. And the threshold to start paying is $400. Now, you might say, well, I had more than $400 of expenses. Well, sorry, you got to prove it now. You got to prove that you had that. If you're going to be an honest taxpayer, you got paid $400 or more, then you're going to have to show that. Now, if you're a business owner and you pay somebody $600 or more, you are required to be the one to tell on them, or else you can be in big trouble yourself there. You're definitely gonna pay their taxes for them, because you're either going to lie one way or the other. So you're going to be in trouble one way or another. So it's a very sticky situation. So even though that threshold for 1099 is $600, that's to pay somebody else. If you pay somebody else who's not incorporated, who has just the LLC, sole proprietorship, partnership, if you pay that 1099 needs to go out if it's $600 or more. But if you're on the receiving end of that and you did not get paid $600 or more from one person, if cumulative, all the money you received from that service is going to be called self-employment tax, which covers the Social Security and Medicare. That's the money for the seniors and for their medical expenses and some of our disabled in society. So should you be mad about paying your fair share of that? We're all kind of chipping in on that Social Security and Medicare, and it starts at $400. So, I mean, it's maybe it'd be great if it was higher, but it's not. So that's where we're at. So even if you don't make a lot of money, if you made $400 or more in that side hustle for the year, you're supposed to file. So $400 of earned income outside a W-2 type of job, or depending on your state, if you made $8,000 or more, you're going to have to file that state return. And then if you just had that W-2 job and you've got the $15,000 or more in 2025, then you're going to have to file that federal income tax return. And maybe with the deductions on there, maybe you don't owe that level of taxes. Maybe you can reduce your taxable income below those thresholds, but you have to. That's what the tax return's for. It's to show that. It's for you to demonstrate that despite that income coming in, you should not be held for, under the rules of the tax code, you should not be held to a higher standard of tax liability. That's what the tax return is for. It's for you to make that claim. So we've heard people in the past say, well, they know these numbers. They know some of the numbers, but also it's kind of a due process issue. So in the U.S., you're innocent until proven guilty. So if the government took the initiative and sent you out that tax and said, you owe this, how likely is it that somebody would contest them? They're going to say, oh, the government knows, they must know. I'm not, you're feeling like you're in a very weak position trying to fight the U.S. government on what they say they owe you. So in the U.S. tax system, we are the ones who tell them first. We say, this is what we say we owe you. Now, if they want to challenge that, they can, but they now have the burden of proving, or at least asking for you to prove. They have to take their time and resources to now come after you. Where if it's on the other foot, where if they say this is what you owe, now you have to put in your time, your resources to go after them. It's going to cost you a lot more as an individual, percent of your ability, right, to go after a large organization like the federal government than it is for the government to come after you. So they give you that first opportunity to make the claim and say, hey, despite what you may have seen in your own tax code, you allow me to take these deductions. These are the deductions I'm taking. Despite what you might have seen, I have these special claims that you allow me to take. I'm going to claim those. And now it's on them whether or not they're going to accept that. You want to be an honest taxpayer, of course, because it's not worth the trouble to fight the IRS. The level of trouble is usually not worth the fight. You've got other important things to worry about in life, like how to make more money, not how to fight the IRS. Pick your battles, and yeah. So, do you have to file, Miss S? If it was over $400 of your side hustle, $400 or more, then yeah. All right. I wish you guys all the success.